Hi, good morning. Good afternoon if you're Europe-based. Thanks for joining me today. We'll get started, guys, only because we have a lot of dense content. We will record the webinar. We will also share the content. We'll send you a link to the PDF of what we're going to talk about today. And so hopefully you all can hear me okay. If you have any questions, just click on the Q&A section of the Zoom webinar bar, and I'll address it in the meeting if we just don't want to have time because we have so much content to cover. We'll follow up via email, but on the off chance you haven't attended one of our webinars before, my name is Armin Kalkash. I'm the founder, managing partner of Revology Analytics. We're a revenue growth analytics firm. And so today we'll talk about the revenue growth analytics maturity scorecard. And we'll talk about the results and sort of RGA capabilities overall for companies and how they're performing and what it means in terms of their revenue analytics capabilities and revenue growth strategies. And so I want to talk a little bit about what the scorecard is and what it looked like. But let me kind of tell you the reason we actually did the scorecard. We've done engagements as part of Revology Analytics for many clients across different industries, primarily sort of standing up revenue analytics capabilities around promotion effectiveness, optimization, price optimization, marketing analytics optimization, things like that. And so one of the things that we've noticed is this incredible disconnect between sort of company sophistication or capabilities in one area, like amazing R&D capabilities, but yeah, they're really, really struggling in these foundational revenue analytics capabilities. It should be sort of the cornerstone of their revenue growth agenda. And so we wanted to do sort of the industry's first revenue growth analytics maturity evaluation. We surveyed about 150 commercial leaders across three areas that sort of comprise the core of the revenue growth analytics capability. And you see that on the bottom left side: margin analytics, optimization, promo effectiveness optimization, sales and customer growth analytics. This middle portion is really kind of mostly relevant for CPGs, retailers, some manufacturers, but certainly the first and the last parts are relevant for all companies. And so we did this survey because we wanted to understand, like, does the empirical feedback from companies support what we've noticed in our engagements, as well as practitioners, right? So I myself have sort of led this function, revenue growth management function for companies, and I've led advanced analytics and data science. And so again, we kind of noticed this level of immaturity across many areas for companies. And so we'll talk about that today, and we'll discuss specific industries, we'll discuss specific domain areas within those, but just to sort of anchor everyone on the off chance that you don't work in this domain. So what is revenue growth analytics, right? You've heard of revenue growth management, which is sometimes analogous to pricing. It's way more than pricing, right? Revenue growth management is right, it sort of encompasses pricing and marketing and all the other areas that help your sales teams win more and help your customers win more, all in the interest of actually making more money for your company. And so revenue growth analytics is simply the set of commercial analytics capabilities that forms the foundation of your revenue growth agenda, right? That's all it is. And so that's really kind of the niche area that we specialize in. And you see the three areas over there. And so when we built the maturity scorecard, we've asked leaders roughly 30 questions in these three areas. And you see the distribution of the questions. But one of the things that we've provided for scorecard takers is that we've actually not only told them where they fall in terms of the maturity by specific area, but it also gave them some very high level recommendations on, okay, you're maybe sort of medium maturity. Here's what you should do to actually augment your revenue growth analytics capability. It's a very high level, but enough to just sort of get their thought process started. And so what you'll see is some scores across some of these areas. The scoring was fairly straightforward. We've normalized the scores between 0 and 100. Those that scored less than 25 at a low maturity, 26, 50 medium, and so forth, right? And so that we're going to sort of evolve how we actually do the methodology around the maturity calculations, but kind of the first kind of initial survey, we felt like this was a good enough method. And so overall, right, when we talk about revenue growth analytics capability, the insights are not very interesting. Sort of 50-50 distribution, right? About 50% of the companies said, oh, I have sort of had medium capabilities. Another 50%, they said high capabilities. When we dig further, we talk about margin analytics and optimization, right? Like what is your overall competency and maturity score, right? You have some different numbers, right? So about 35% of the companies are medium, low, and sort of a higher 65% was higher, very high maturity. It was a very big difference between this, which tends to be important for most companies, versus like promotion analytics or versus marketing analytics, right? There's a drastic difference between the capabilities across those areas, and I'll talk about that a little bit. But one of the first questions that we ask companies in this section, margin analytics and optimization, was very simply, how frequently is your pricing performance measured and reported, right? So it's a very kind of simple foundational pricing 101. How much is my net price realization, i.e. how much revenue and or gross profit am I driving strictly from my pricing actions, taking away customer mix improvements and selling more stuff. And so again, this should be a pricing 101 type capability. And so when companies answer this question, the scores range from 1 to 5. 1 is rarely, 5 is weekly. And so typically you'd want to measure this on a monthly basis, unless you're in some business where price changes are a lot more dynamic and there's a lot more shocks to your sort of industry and market trends. You really want to measure on a monthly basis. What we tend to see, CPG, so consumer goods companies, tend to be the highest end, right? So they do it at least on a monthly basis. Medical devices manufacturer, they tend to be the lowest end, right? And again, like this is a sort of a foundational thing for most companies to have. And again, about a third of the companies, they rarely measure this, / maybe they measure it on an annual basis, simply as a reporting mechanism, as opposed to a mechanism to get insights and formulate actions to sort of mitigate any sort of downward trend or accelerate their revenue growth, right? So it's simply kind of used as a reporting optics type tool that companies leverage, and that should not be the case, right? So again, big opportunity around measuring price realization, which is a very, very simple topic. The second question was, the senior leaders, do they actually recognize the importance of margin analytics and optimization? And so this performed pretty well. That's not the case with things like sales and customer growth analytics. But one thing you will notice is there's a sort of the statistical honesty when we look at the respondents, the maturity or the competency scores, they increase, fairly kind of, linearly, depending on whether there's strong executive support down here or very weak executive support, right? So your maturity scores differ, which is again common sense, right? The more your senior executives support and are vocal about enhancing certain key capabilities in your organization, right, the better your functionality and your capability is going to be, right? It's just kind of a well-known thing. But again, there's still about 30% of the companies that were sort of neutral / disagreed with this notion, right? So again, some opportunity to improve there, but again, less concerned about this one, right? So again, good focus there. Price elasticities. Again, if you want to have a really strong revenue growth management capability, a sound pricing strategy, you need to be able to understand your price sensitivity. And so it's sort of a typical thing, like CPGs in retail, they're fairly good about measuring price elasticities and updating that at least on an annual basis. And again, you see the scores, right? They range from 1, which was we rarely measure price elasticities, to 5, we actually do it quarterly. Again, for industries where it's a bit more dynamic, perhaps there's some seasonal impact to price sensitivity, right? You want to measure it more frequently. But at least you want to do it on an annual basis. And so CPG retail tends to do well. Manufacturing and medtech and medical devices, they're clear laggards in this arena, right? And again, this should be a foundational thing that you need to measure for your companies, not just for your own products, right? And not just your sort of own customer price sensitivity, but if you have distributors, perhaps measure their price elasticity. If you're going through a retailer, measure consumer price elasticities, right? Sometimes there's a disconnect and there's a big divide between the behaviors that your distributors are exhibiting, as an example, to changes in price or promotional movements versus the changes in what consumers are exhibiting, right? And so there's strategic implications to that. But again, a good 56% of the companies said, well, we really do it less than annually, or we kind of rarely do it. Again, so it's a really, really big capability that just sort of needs to happen as sort of a one-on-one type activity. Price value gaps. Again, within the context of margin analytics and optimization, one of the questions was, does your marketing team do they have sort of adequate customer research and competitive analysis to understand your differential value proposition, right? And so there's this fundamental concept around your differential value relative to your competitors, as well as your relative price, right? So how much value are you sort of giving to customers or consumers relative to the price position that you have to competing alternatives, right? And so the question sounds more complex than what it actually should be, right? Like this should be a foundational thing for most companies to know, especially companies like consumer products, et cetera. But what we tend to see, right, is we tend to see these really low scores, right? So manufacturing, this sort of, tethering in this, well, we kind of rarely measure it, not at all, minimally. Same thing with CPG, when in fact, this needs to be sort of an ongoing, extensive measure, especially for anchor brands and anchor products, right? And so there's some clear differences here by industry. Notice technology is actually pretty decent, right? So kind of in that 3.5, which is in between somewhat and extensively, makes sense. I mean, I think a lot of tech companies, we've had some SaaS respondents, they tend to have some kind of a good understanding of measuring and quantifying value via research and things like that. But for CPG, it's a big, huge opportunity, right? And so again, for those of you that may not have seen price value maps and may not sort of understand the concept, it's very simple kind of depiction, but what you tend to see is you'll see like your own product here. This is this kind of blue rectangle versus competitor products over here, and you map it on a 2-dimensional kind of scale around perceived quality and perceived price. Perceived price is simply your pricing relative to the competitor pricing. It's a calculation, right? Perceived quality, that's what you actually need to understand via consumer research, right? And so there's a combination of consumer research and some machine learning methods that you can employ, and we have some resources on our website. You can read some articles on exactly how to do that. But the point is, it's very easy and very simple to do, and very simple to kind of refresh every year to understand, are you value disadvantaged? Like if you look at this kind of map, our product is value disadvantaged relative to the competitors. Are you price disadvantaged? You have a similar perceived quality, but are you much more expensive? And depending on those situations, there's different strategic implications, right? You can improve your price position via promotions. You can improve perhaps not the absolute quality, but you can improve the perceived quality of the product by interacting with your marketing team. And so I think the couple of things that I would highlight here is when you try to sort of capture the differential value proposition of your product, always work with a third-party independent market research team. Never rely on your internal team. I see these companies do this all the time, where they have internal experts, sort of a cross-functional team of marketers, product managers, finance, et cetera. And they try to do these product value mapping exercises, and there's always a heavy bias introduced, right? And so it's never nearly as good as leveraging a third-party market research firm to actually do this, right? That's number one. Number two is when you actually do these exercises, make sure there's really strong collaboration with your cross-functional teams, especially sales, marketing, finance, right? Maybe finance can help sort of re-engineer the cost profile of the product, right? Maybe marketing needs to do a better job communicating the differential value the product has relative to your competitors. And so it's incredibly important to ensure the level of collaboration. But again, I'll reemphasize price value maps, key margin analytics and optimization capability does not happen nearly enough for companies. The next question we asked was, are your pricing decisions driven by robust diagnostic and predictive analytics? Again, it's a simple thing. When you're about to do price changes, isn't it actually informed by sort of what caused a certain business trend? And if we make a price change, what is the impact on my profitability or sales or customer mix and things like that, right? And so these capabilities need to be sort of instant, right? Like if you want to understand the impact of your price movements, you can do that in a few minutes, right? It should not be a sort of a multiple day exercise. And so again, what we tend to see is companies lack in this area. So if you notice the responses, they range from 1 to 5 rarely versus 5 was sort of consistently. We'd like to see a 5, right? For most companies, we're living in 2023, right? We're arguing about artificial general intelligence and things like that. Like this needs to be a fundamental capability. Why? Because it's relatively easy and simple to set up. And so again, what we see is CPG, it tends to be the best one, right? It's sort of unsurprising outside of maybe travel, hospitality industries that sort of had this notion of revenue growth management and price analytics and yield management and things like that for the last half century. CPG has probably had fairly mature revenue growth management functions for the last 15 years or so. And they still have lots to improve upon, but they tend to be the best. Manufacturing and medtech is just heavily kind of lagging behind, right? And so we've kind of seen this firsthand with clients in those industries. Again, like very basic questions around what happens to my business if a competitor makes a move of whatever X% price change and I make a move of Y%. What is the impact to my business, right? And how do we think about the strategic implications, right? And so these should be very simple questions to answer with the click of a button. Most companies don't have these capabilities if you look at the chart below. I'm going to just kind of quickly touch base on this. You'll have most of these slides. I think we have like a fairly robust 70 or 75 pages like that you can have. So there's some like recommendations included that you can read through. But the one thing that I'll emphasize, right, is to have really strong revenue growth analytics, and especially margin analytics and optimization capabilities, which is really this section. The number one kind of foundational thing to do is have a purpose-built pricing and promotional data warehouse. So it's as simple as that, ideally in a kind of a cloud, some kind of a cloud data warehouse, maybe on-prem if you're a larger company, but have a place where all your pricing, promotional, transactional, inventory, rebate data, even competitor data, maybe some customer sort of hierarchies, demographics, psychographics, it's all in one place. It's easily queryable and it's easily sort of interconnected, right? That's kind of a pricing analytics one-on-one thing to have. Many companies we see in the mid-market space, and again, it's a wide range. It's from about 10 million to about $1 billion, right? But many mid-market companies still don't have this, right? Even if you look at the upper end of that mid-market, we're talking 500 million to $1 billion, like they just simply lack this purpose-built integrated pricing and promotions data warehouse. It's not that expensive to set up and the payoff is immediate. And the second part that I emphasize is CEO support, right? There has to be on the agenda to actually build these capabilities so you can drive your revenue growth strategy forward. The next question that we asked was, do you have a comprehensive understanding of the drivers of your revenue and gross profit growth, right? So if your revenue or gross profit is down by X million or X%, what drove that, right? What pricing action drove a certain margin erosion down to the segment or the product level, right? How did customer mix or product mix impact your profitability? How did sales volume impact some of the results? And what can you do about it? Like, let's actually run some scenario analysis. What if we improve the cost structure or the price or the mix, right, in specific areas? What is the impact to our business? Again, very simple foundational things. And so what we see is CPGs tend to do a good job, right? They were the highest, again, which is unsurprising. But we still have, about, 40% or so of the companies, 46%, that are sort of in this neutral to disagree, strongly disagree, which is very concerning, right? So again, if you kind of round it up, it's a 50-50 distribution between companies, understanding what the drivers of the revenue gross profit growth versus that being sort of either kind of a heuristic or a multi-day exercise with random Excel sheets that are being built every day and every week, right? This should be an ongoing sort of diagnostic analytics / predictive analytics capability that is, by the way, very easy to set up nowadays, right? Just using your existing tech stack, right? And so again, this is a huge opportunity we saw for companies. There were many more questions that we asked in this section. You'll see it in the appendix when when we send out the slides. And so maybe the only thing that I'll call out here is if you're building these capabilities, again, very simple, revenue, gross profit growth drivers, try to move beyond Excel. So try to leverage your existing tech stack, especially if you have Tableau or Power BI. You can code the analysis out much more easier using transactional data. Most of these tools nowadays integrate well with Python and R, and it's, again, super easy to kind of build this, super easy to visualize, and very easy to kind of build drill down capabilities, right? Peeling back the onion around your insights and then building some predictive analytics capabilities. And so we've kind of put this illustrative visual there, kind of what it may look like. We can drill down into the results. But again, you want to build this. You also want to kind of democratize the concept of gross profit drivers across your companies. We're always surprised to see finance folks and even some sort of commercial leaders that struggle with this concept of price, cost, volume, and mix. Right. This is a fundamental concept that needs to be a key capability in most companies. I'll skip over the tool selection. Maybe the only thing that I'll touch base on later on is there's no difference between using turnkey software and vendor solutions for your pricing analytics or pricing optimization efforts versus using homegrown tools. And the homegrown tools could be Excel, could be Tableau, Power BI, it could be some web app that you've built off of your client infrastructure, right? But we saw no difference in maturity scores whether companies use turnkey product or homegrown product, right? The next couple of sections, and we'll switch over to promotion effectiveness. The question that we asked was, well, are you actually aware of your industry margin pools by product? And so this was a big miss across most industries. About 60% of the companies, they said, no, I have no clue what the margin pool is for my product and what is my share. And so this concept of industry margin pool is very simple, right? If you take a product and you evaluate the total profit that product generates, starting from the cost to manufacture that product, or the cost of goods sold, pretend you're the manufacturer, all the way to the price that it gets sold to consumer. What is that total profit, and what percentage of the profit are you making versus what percentage of the profit are other participants in your value chain making, your distributors or your retailers? And in most industries, we tend to see an imbalance, right? And that imbalance, a lot of the time, is driven by information and capability asymmetry, right? So you may have certain industries where you have some mega distributors, right, that are, several, like 10 times bigger than the actual manufacturer, 20 times bigger. And they have all these capabilities to understand market trends and predictive capabilities, prescriptive capabilities. And they recognize that if the manufacturer offers them a deep discount during a highly seasonal time, maybe you're a medical device company and distributors are realizing that doctors are anyways just going to buy the product at year end because they can write it off as part of their taxes. They don't need to pass on the full promotional investment from the manufacturer. They can pass on maybe 50% or 30%. They'll pocket the other money and put it in their bottom line. We see that happening all the time in industries, right? So that's why it's incredibly important to measure your margin pools. And you'll see that by industry, there's virtually little difference, right? And manufacturing is lagging behind significantly, but that's another key margin analytics and optimization capability the companies are simply missing out on, right? And so again, illustrative example that you'll have in the slide. But again, what you tend to see is, depending on the discount that you're offering to end customers, despite what the agreement that you have with your distributor partners or retailers, a lot of the times there is an imbalance in the profit pools. And a lot of the times there is some level of arbitrage where manufacturers are sort of are getting a much less share of the total profits. Okay. I know I'm moving fast, guys. I'll move on to promotion effectiveness and optimization, because I want to talk about the third section, which is probably my favorite section, sales and customer growth analytics. So customer, sales team facing capabilities, as well as marketing analytics, right? Promotion effectiveness looks very different. So if you look at the overall maturity scores, right, margin analytics and optimization was pretty high, right? It's a concept that makes sense for most companies, especially finance teams. Finance teams care about profit. Promotion effectiveness is still a key capability, right, that is lagging behind in many companies, right? So you see about 62% of the companies are sort of medium low maturity. And depending on industry, that varies. And depending on the sub area, it varies. But one of the first questions we asked was senior leadership support. Again, I'm not going to belabor this slide. It's sort of common sense. Again, the greater your senior executive support is in building these capabilities and making it really kind of visible and important, the better your maturity score is. And that's what you tend to see with this section as well, right? When we've asked respondents to rate their organization's overall promotion analytics capabilities, again, we've gotten a very sort of statistically honest assessment, right? It was just some kind of random answer. We would see kind of a 50-50 distribution in this chart. But we tend to see is 51% of the companies rated themselves as weak or very weak, right? And what's surprising is if you look at this, CPG was the best, but still fairly low, right? Still slightly below this average line. And it's interesting because CPG tends to be one of the most mature industries in kind of evaluating promotion effectiveness, right? There's quite a lot of turnkey software that actually does promotion management and effectiveness and optimization. And so most CPGs, particularly larger ones, right, in excess of maybe $500 million, use these turnkey solutions, and yet they're rating their ability to measure kind of do promotion analytics and optimization average or below average. And so, I think some of this comes down to certainly capability, or maybe not having a solution that is sort of customized to their company, or not having a solution that their teams are comfortable enough to using. I think the other part is there are just some industries that are sort of very tactical when it comes to doing promotions, and CPG and retail are prevalently known for that, right? There's this sole prisoner's dilemma, right? Unless you do these crazy deep promotions that are absolutely profit dilutive for you as a manufacturer, if you don't do it, your competition will, and your market share will suffer, and you're at the risk of being delisted by the retailer, right? Because for some reason the retailer cares about gross margin profit, and they care about lapping their crazy low profit dilutive promotions that they did last year. So there's a lot of tactical thinking that is still prevalent in many industries that I think is driving some of this bad behavior. The point is, companies, despite having some of these sort of tools or software, they're still essentially rating themselves as pretty bad in this area. So there's a lot of opportunity to improve. I'll skip over this and I'll go straight to sales and customer growth analytics. And so this was an area that I think many companies suffer, particularly in the mid-market space, even some of the larger companies that we've interacted with. So if you notice, about 75%, whatever, 3 out of 4 companies rated themselves as medium or low maturity. About half the companies almost, they rated themselves as low maturity. And so when you think about sales and customer analytics, right, it's all about, one, evaluating the effectiveness of your marketing and commercial initiatives, right? So for every dollar that I spend on marketing investments, what is my return? What is my incremental sales? What is my incremental profit? But it's also sort of this notion of building analytics capabilities that help your sales teams and help your customers win more, right? That's this kind of third branch of revenue growth analytics. Most companies are bad at this, right? Tech companies tend to be the best. And when we ask the question, how would you rate your own abilities, right? So this is different than the overall maturity score that we calculated based on the aggregate results. This is kind of a self-assessment, and tech companies were the strongest, which is, again, not surprising. I think for many sort of SaaS companies that tend to be more mature, they're also kind of digitally savvy. So digital marketing effectiveness, for example, is pretty kind of native to them. Manufacturing was one of the weakest ones, right? If we look at this kind of first key question that we asked, which was, very simple: is your company aware of the marketing ROI, whether by channel or by medium or by campaign? The resounding answer was no. So about 70% of the company said, no, we really can't quantify the impact of our marketing investments, which is, if you think about it, again, we're sort of in this era where, the conversation is being dominated by generative AI, and companies are thinking about standing up their generative AI COEs and, AI and stuff like that. And fundamental things, companies are still not prepared, or not, they don't have the capabilities deployed to actually answer these simple questions. We tend to see that for many mid-market clients. So about 70%, particularly prevalent in manufacturing distribution space, right? what we tend to see is companies have a really good storyline around how marketing is improving their brand equity, or maybe they have some like simple ROAS calculation that's less machine learning or modeling driven. It's much more kind of kind of straight up false kind of math, but they don't have a really good way to quantify and optimize their marketing spend, so they make more money, or they attract new audiences, or they get more purchases and more spend from their existing audiences. And so, of the 30% of the companies that say they do this kind of on a regular basis, they understand the impact of their marketing spend. If you look at this chart on the bottom left, about a half they say they use attribution modeling, about 20% they use marketing mix modeling, and 30% say both. And I always sort of advise companies that they need to do both, right? These two techniques, they sort of tell the same story, but in different ways, right? Marketing mix modeling is a much more sort of higher level aggregate statistical method, whereas attribution modeling has to be sort of done at the customer level, right? And it's actually becoming more and more difficult to do this due to privacy regulations, due to how certain companies, devices, browsers, etc., allow the capture of consumer data from third parties and things like that. So marketing mix modeling is actually enjoying sort of a renaissance over the last couple of years. And the beauty is you can do these things, right, nowadays yourself, right? Or certainly with the help of consultants, but you can do this much cheaper. So the days where you're spending, $150,000 to $250,000 on a marketing mix model, those days are gone, or they should be gone. Why? Because most of these capabilities are actually, they're available, they're democratized. You have some really cool packages that you could use as they are, or you can modify it, right, for your sort of own purposes. So like, for example, we use Meta's Robin, we slightly modify it. We also use kind of a combination of that, which is more frequentist approach to marketing mix modeling, as well as Bayesian approaches. But nowadays you have packages that are out there that give you a good enough answer, right? So if you have some decent business analysts or data scientists in your teams, you can actually do that and get a pretty decent first look at the impact of your marketing investments, or at least get rid of the low-hanging fruit, like really bad, unprofitable marketing investments. So I really encourage you guys to check these resources out, because there's more and more that's coming out. The next question that we ask companies was, do you have customer-facing analytics tools that help address certain pain points, right? So this is this concept of it's great to have tools and solutions that help the sales teams win more. For example, having tools that proactively will predict customer churn and call attention to that fact to the sales teams, or tools that are perhaps knowledge graph based that help the sales teams with what the next best action should be for that customer, right? These are also fundamental capabilities, and we also sort of included this in our revenue growth analytics scorecard. But this one is all about building tools that help the customers do better, make more money, sort their products better, manage their inventory better, et cetera. And so again, similar, 70% of the companies, they said, no, we don't have these capabilities. If you look at manufacturing, again, slightly biased answer because we had less manufacturing respondents, but a lot of the respondents from manufacturers said they do customer-facing analytics tools. About 70% of consumer goods companies, they said they don't have any customer-facing analytics tools, i.e. retailer-facing. And then industry. And if you think about it, there's a lot of opportunity for many of these industries to actually build these things. Your CPG, you're interacting with retailers. A heavy portion of your retailers are not your kind of leading grocery chains and mass merch retailers like Target or Walmart, right? Majority of them are sort of either independent chains or smaller retail chains. There's a strong opportunity to actually build assortment optimization tools, or maybe category level promotion optimization tools, anything that would help those customers make more money, sell more. Same thing for distributors that are dealing with smaller independent retailers. You can build solutions for these customers that help them do better. And again, the key is not to build super complex solutions, right? The key is to build solutions in a way that customers understand and actually aligns with their operating rhythm. And in many ways, you can actually build these things. Your customers will do better. It'll drive greater stickiness and greater customer retention. It'll also perhaps enable you to either get or sort of justify any sort of premium price position that you have, right? Because you now have a differential value proposition as a company. And so I really encourage you guys, if you work for companies where you have robust, zero party, first party, maybe even some like third party data that you pay for, that you think can be aggregated and built into a tool that helps your customers win more, absolutely do it, right? But do it in a way that is co-created with the customers, right? A few select customers, not in a way that's kind of built by a bunch of PhDs that only PhDs can use, right? So that's a really important aspect. Let me look at the questions real quick. If you have any questions, guys, just please click on the chat and please ask. And again, you'll have this content later on. But I want to talk about insourcing some of these capabilities, right? I think the reality is for many industries, right, there's still such a heavy reliance on vendors, information providers, et cetera, et cetera. This is especially prevalent in CPG, a couple of other industries where you've sort of, dealing with, 100-page PowerPoint decks without kind of clear so what or, clear, action steps, and the impact is sort of missing, right? So it's sort of entering this paralysis analysis phase. And so many companies have a real opportunity to sort of insource these key revenue growth analytics capabilities. So that's one. And then the second piece that I'll sort of articulate is, I think analytics and data science and that entire model, right, over the last couple of years, right, we've kind of proven that the model that we thought was the right model doesn't necessarily work for companies. I think most companies need incredibly strong data engineers to get their data right. They need a handful, depending on your size, right? Anywhere from a couple to a handful of machine learning engineers that can actually help you build apps that leverage machine learning and things like that. But you really need some business analysts who are strong domain experts, either in marketing or pricing or supply chain, and actually equip them with foundational machine learning skills, right? Because I think most companies, they don't deal with like one or two, major analytics problems. They deal with dozens, hundreds, or thousands of problems, right? Like every day, every month, every quarter, that business analysts with advanced skill sets can solve much more effectively because they have domain expertise, and they also know what's pragmatic, and they also know what aligns with the operational rhythm or the analytical maturity of their internal or their external customers. And so my point is insourcing these capabilities and putting this in the hands of capable business analysts that can be upskilled is incredibly important. One of the things we're seeing with companies, and the way to read this is the margin analytics and optimization capability scores on the top chart, the promotion effectiveness and optimization capability scores on the bottom chart. We see virtually no difference between homegrown tools, so self-serve BI or homegrown, and actually specialized enterprise software. Maybe there's like one industry that's kind of an outlier, but for the most part, these scores are kind of in the same range, right? So you can actually build these capabilities just as much using homegrown tools as you can do with turnkey software, right? Unless you're a super big, complex organization that needs to leverage some SAP module, right? But otherwise, for a lot of these key revenue growth analytics areas, you can build it yourself using the tech stack that you have. And the reason is the analytics landscape has changed just substantially, right? So even if you look at the last 10 years, you look at early to mid 2010s, right? We've had the emergence of Tableau and Power BI was catching up. But BI tools are fairly sort of basic, right? And mostly used for data visualization. A lot of data was still kind of on-prem, and we've started to use cloud infrastructure just around that time. Hadoop was big, which then was sort of abandoned by most companies. But fast forward 5-6 years, right? We're looking at late 2010s, early 2020s, right? We've had these self-serve BI tools that are actually quite sophisticated now. They actually have modules where you can leverage, or you can leverage Python. They can do scenario analysis in addition to kind of descriptive and diagnostic analytics. And so that's one aspect. The second aspect is a lot of these algorithms that we talked about that help with price optimization, elasticities, marketing effectiveness that have been democratized, right? And people, including myself, right, we're openly kind of sharing a lot of these things that companies can leverage. And of course, LLMs are, nowadays are like the world's best intern, and they can really augment capabilities of existing analysts and just really give them some superpowers. So that coupled with some knowledge graphs, which is an emerging topic, we're actually going to give a webinar on how to leverage knowledge graphs for promotion and price optimization in a couple of weeks. But these are like emerging kind of technologies that companies can utilize. And again, building sort of in-house capabilities, insourcing them and leveraging them. I'll talk about this a little bit, and I know Christine had a question that I'll address. But one of the big benefits is obviously it's tailored to your business, right? You can actually build these capabilities in a way that is co-created by the end users, in a way that is co-created with your salespeople, with your product managers, merchandising teams, in a way that aligns with the analytical maturity, right, of your company. If you build something that's super complex, hard to understand, hard to use, super clunky, and doesn't fit the operating rhythm of your team, doesn't matter how good the solution is, it won't be used effectively, and you won't get results, right? So as a result, a lot of these in-source capabilities that we're seeing with companies, they just have a much better data ROI, right? It's just the return on investment is immediate, right? Companies feel like they have ownership of the solution. Team members feel like they have the ability to enhance it, make it better, et cetera, et cetera. It's also a lot more responsive, right, to certain trends in the industry. And you can actually build a lot more effective sales and marketing enablement products. The last piece that I'll leave you with before I address the questions is how do you actually do these things in a way that kind of drives real impact for companies, right? Not just like impact on paper, but like actual impact that's quantified, measurable. And so I think the biggest challenge will be always sort of the last mile. Doesn't matter what solutions you're building. The teams, the sales teams that are interacting with the customers, the teams that are deploying pricing and executing on pricing, the teams that are doing the discounts or whatever else, right? They have to understand how it works. They have to be familiar with it. They have to be okay with how it's built, right? They have to feel like they're part owners in it, right? So this last mile adoption is the biggest issue. Most big analytics initiatives fail for companies, right? You guys have seen the 80, 70, 80, 90% failure, depending on who you talk to. It's kind of in that range of most sort of digital transformation / AI initiatives, right? They just didn't work. It was mostly kind of a paper exercise for many companies, or at least a perception management exercise, right? But nowadays you can build these things for real impact. And so the key is to engage with stakeholders, right? To get some champions, but to also get some analytics translators from your key functional teams, right? People that actually understand pragmatically what these capabilities can build. And then again, the last piece that I'll reiterate, guys, is to build really strong commercial analytics efforts. Find those folks in your companies, right? Business analysts especially, that are intellectually curious, they're hungry, they want to do better, they want to learn more about machine learning. Nothing crazy, no LLMs, right? We don't need them to create kind of proprietary, generative AI in their companies, but like fundamental machine learning, how to do price elasticities using regressions or other fundamental machine learning methods like random forest or whatever, right? But learn the basics that can add real pragmatic value, and learn some coding, right? And invest the time and money to actually upskill these people, because what really takes these organizations like a week to do, you can do it in an hour, right? It's just the reality of the world that we're living in, right? And so I believe, despite being a data science practitioner, right, I believe that when you actually combine these fundamental capabilities with kind of domain expertise and like business analytics, business insights type capabilities, it is often way more impactful than kind of your traditional data science setup for companies, right? And so I really urge you to kind of think about that. And the last piece again is simplicity and co-creation. And so again, we're living in an era where we're always distracted by AI and especially LLMs and things like that. And so simplicity matters. So to the extent that you can get a good enough solution that gets you to 80, 90% of the value realization, and if it uses simpler methods, whether it's regression or whether it's like a basic form of machine learning, or if it doesn't even use regression, it's just some simple like middle school type calculations. If business users like it, it aligns with the way they work, it aligns with the way they interact with customers. And again, it gets you to that 89% value realization. then do it that way, right? You don't need fancy AI or fancy algorithms. And so I'll leave you with these thoughts, guys. Again, you'll have a lot more kind of content on revenue growth analytics maturity and how companies scored. And we have an appendix where we have the results for all the questions. This is something that we will repeat as an organization every year. We'll likely modify some sections and kind of perhaps add a couple more questions. We're going to try to do this in a way that's not too invasive, but we want to actually measure how revenue growth analytics maturity is changing year over year, especially as technology changes, right? So let me kind of address some of these questions. Christine, thank you for the question. Christine asks, do you think some of the self-appraisal skills so low in CPG because of their relative reference point is other CPG rather than other industries? Their benchmarking is potentially skewed. Yeah, I think it's a good question, Christine. I think it's always kind of the I think it's always kind of the worry with all these kind of respondents is what they're anchoring to, right? I will say I think a lot of the respondents that obviously it's anonymized, but just kind of knowing the profiles of some of these folks, I think they're smart enough to understand what exists in their industry. I think they're smart enough to understand the impact of the capabilities and tools that's having on their industries. And I think they're kind of honest with themselves. They're realizing that despite having these crazy multi-million-dollar solutions, our promotional ROI is no better off than what it was, 5 years ago. So I think there's some level of intellectual honesty there for sure, right? And that's a conversation that I have all the time with consumer products companies. They have some incredible folks working in revenue management. And I think some of the smartest folks actually in pricing working CPGs. Really strong capabilities, really sophisticated tools. Promotion ROIs have marginally changed versus 5 years ago or whatever, right? And I think it's something to do with the kind of the industry setup and sort of this prisoner's dilemma issue that we've seen. I'd love your advice on building in-house business analyst capabilities, but I see there's a missing level of senior practitioners to train in the teams. How do you see orgs bridging the gap between current skill diversity and the needs of the future? No, it's a great question, Christine. Yeah, so I think for sure, it really, really helps if you have some senior level advanced business analysts or senior level data scientists who sort of done that. And I think so. I think that's one angle, right? Just have those folks in your team. The other angle is you sort of outsource the training to companies that do that, right? And self-servingly, we at Revolgy Analytics would do that. In fact, we're doing that next week with a large CPG where we're sort of upskilling their existing pricing analytics and revenue management team on how to do some of these things like price optimization, elasticities, things like that. But I think the big piece is like definitely invest in your teams to sort of upskill their capabilities in a particular domain area. And again, having those senior practitioners in-house really, really helps from a mentorship standpoint. It's probably the biggest gap we're seeing that I see between novice data scientists or novice business analysts versus more experienced ones. The more experienced ones, despite having incredible advanced skill sets, they've now realized, and I think to a great extent, resigned to the fact that, like basic approaches work more effectively in companies when they're trying to solve these key business problems. Whereas folks that have been, just a few years kind of doing this, they're still striving for the advanced, sophisticated, let's try to use some deep learning in my solution, right? And so I think that's the biggest kind of the gap that I see is you certainly have to have the capabilities, but you have to have the business experience and pragmatism, and you have to walk in your customer's shoes to understand how to build those solutions in a way that's going to be actually leveraged. Parth had a question: any thoughts on building AI-driven retail markdown engine? How much retail and other industries are ready for such implementations? I think Parth, I think AI. At least within the context of sort of price optimization, is really, really well suited for like markdown and markdown slash discounted type problems, right? But especially markdown, it's a much easier problem to solve with AI and optimization than it is to solve kind of general price optimization, right? And so the couple of things that I'll mention there is one, yeah, it's being used in retail already. I think certainly like larger retailers use it already, and there's many kind of software providers that do that. But the second piece I'll mention that is there's kind of varying levels of building these markdown capabilities. I think on the lower end are capabilities that you can build even based on some like heuristic rule-based if else then type setups, right? And we've certainly done that for like distribution type industries and retail, where you have some underlying machine learning model maybe to evaluate price and promotional elasticities, but the actual engine is much more rules based, right? There's actually no optimization underlying that, and honestly, for many industries, Parth, it can be quite effective, right? Particularly where you've done no inventory or markdown optimization beyond kind of doing this manually, right? And so right off the bat, I think in year 1, year 2, that can be a really, really effective method. The other question you had was you mentioned on knowledge and vector graphs in one of your slides. I read your blog on that as well. It sounds interesting and useful. Does it work with structured data sets? It does. Yeah. So so we're not yet using any sort of LLMs. We're not kind of vectorizing any of the data part. For knowledge graphs, we're actually using solely structured data. And the use cases that we have so far are twofold. One is sort of marketing knowledge graphs, where you're connecting marketing and campaign data with transactional data and customer level data. Again, and not anonymized customer level data, but it's still individual customer level data, where we help the marketing teams just enable them to answer all sorts of multidimensional, insightful questions about their business that otherwise traditional analytics would make it really, really hard to do. And those marketing knowledge graphs also allow to do multi-touch attribution, right? Natively. So you can actually build multi-touch attribution as part of the relationships between customers and marketing campaigns. So you can immediately kind of figure out the ROI. The other type of knowledge graphs that we've started to do was sales knowledge graphs. And that can range anywhere from sort of evaluating the effectiveness of sales activities and customer touch points to leveraging that to recommend kind of a next best action type stuff to do for sales, all the way to training optimization. So being able to kind of connect training touch points to customers or salespeople delivering training and connect them to business results. So we can actually answer the question like, are you actually effective doing all this customer training? Which elements are effective, which elements are not? Where do you need to optimize, et cetera, et cetera? And so so that all works with structured data. We have not, we have a partner who's kind of dealt with true kind of knowledge graph LLM combinations and kind of building those proprietary solutions for companies. But we have not done that yet, just mainly because we deal with revenue growth analytics problems. But great question, by the way. Can you point out some model to estimate promo effectiveness? Somebody asked. Yes, I will send you guys some resources as a follow-up, some kind of available resources to evaluate promo effectiveness and things like that. So be on the lookout for that. And then Christine mentioned solutions in search of problems versus meeting the business with the data they have existing processes. Yeah, I mean, that's, no, Christine, that's a great point. That's honestly still the fundamental issue that we see with industries. That's been the case with sort of the data science hype over the last decade. That's kind of the thing with the generative AI and LLM hype today, right? I think generative AI is incredibly useful for businesses in certain narrow areas, right? But you're still seeing a lot of the kind of solutions in search of problems versus, to your point, actually meeting the business where their organizational and analytical maturity lies and where their operating rhythm is set up. So that's a great point. Guys, if there's no further questions, hope you enjoyed this. Again, this was just an overview of a revenue growth analytics maturity study. As you can see, ton of opportunities. We're in 2023. We're talking about artificial general intelligence. Yet there's still fundamental capabilities that are sort of the foundational enablers of the revenue growth agenda for companies that companies just don't have. And I think it's time for all of us to like start building these things and educate our own companies and others to get this right. So I'll send you guys some resources, answer the questions that we have not been able to answer properly. I'll send you guys a recording of this video, and then I will also send the Revenue Growth Analytics Maturity Report out to you guys. Be on the lookout for that on Monday. Feel free to share with your team members, and if you have any questions, please reach out to us. You can access our website. If you have any questions on this topic, just let us know. Really enjoyed talking to you guys. Enjoy the weekend.